Forming a trust. There are two types of trust. One is an inter vivos trust, and the other is a testamentary trust. An inter vivos trust is a trust that you set up during your lifetime, hence it is called a living trust. A testamentary trust, on the other hand, is a trust that you set up in your will, and it only becomes operational upon your death. So these are the two types of trust that can be set up by any individual. There are several benefits as far as trusts are concerned. One of the main benefits that it offers you is it helps you to save taxes at the time of your death. What are the main taxes that you pay when you die? It is estate duty and capital gains tax. Now, if you actually acquire assets that are going to grow in value over time in the name of your trust, it means that upon your death, those assets are not reflected in your estate. And the important principle is that whilst you are a beneficiary of your trust never dies for estate duty and capital gains tax purposes. So certainly those assets are excluded and you will save estate duty and you'll save capital gains tax. The other aspect that you need to consider is that if they are beneficiaries within the trust that you have set up and you have property that, for example, let's say immovable property, and that is you are in fact collecting rental, you can then distribute the profit you make out of the rental to individual beneficiaries who could even be minor children. It could be 1 year old, 2 year old, and then you make them taxpayers. Now, in South Africa, because we have a progressive tax system, the lower the income, the lower the rate of tax you're going to pay. So by splitting the income amongst your beneficiaries, you are now creating taxpayers with regard to those beneficiaries, and they would be taxed at a lot lower rate rather than that income be reflected in your name. So certainly there is a huge saving from an income tax point of view. So you can clearly see that you are saving estate duty by forming a trust, you're saving capital gains tax, and you're saving income tax as well. But remember, these are applicable to an inter vivos trust, a trust that you set up during your lifetime. It doesn't apply to a testamentary trust, which you set up in your will, and that only becomes operational upon your death. The other advantage of the inter vivos trust is that it protects the assets that are registered in the name of the trust from your creditors. So if you do get sued for any reason, then your creditors can't come and attach assets that are sitting in the trust, although you are one of the beneficiaries of the trust. Also, if they are beneficiaries who are minors, those are children below the age of 18, find that their interest is protected if its assets are registered in the name of the trust, because you cannot register assets in the name of minor beneficiaries. Certainly, from a succession planning point of view, it is pretty useful because a trust can have a life as long as you wish. So, in other words, it runs over a couple of generations, and by you putting assets in the trust, you can move from one to the second to the third to the fourth generation. So certainly, those are the serious benefits that you get out of a trust. Are there challenges? Yes, of course. In life, there are always challenges. The challenges being there's a lot of compliance that you have to ensure in your trust, and that is becoming a bit of a problem because we have now, as South Africa, been grey listed, and hence you have to comply with a lot as far as the trust is concerned. You also have to appoint an independent trustee in a trust, especially the more recent trust. It has become law from March 2017 that you require an independent trustee, and that person must not be a blood relative of the beneficiaries. There are costs involved, of course. There are costs involved in setting up the trust, preparing financial statements, submitting it to SARS. However, if one really looks at the benefits, they far outweigh the costs that apply to trust. So certainly, if a trust suits your requirements, especially for high net worth individuals who have lots of assets that are going to grow in value, whether it's immovable properties, it could be shares on the stock market, it could be shares in companies, in private companies, it could be unit trusts, it could be insurance investments, all of these kind of assets that over time will grow in value, it's much better to place these assets in an inter vivos trust. So those are certainly the serious benefits that you get out of the trust, and they far outweigh the challenges and the costs, etc., that apply. Garach Corporation are advisors in the financial and fiduciary sector. We have within one office chartered accountants, legal advisors, tax consultants, certified financial planners. The group comprises entities which are registered as authorized financial service providers. We have offices both in Durban as well as in Johannesburg. Our service offering includes tax, insurance, investments, wills, trusts, estates, and accounting.